I want to come and quickly show a chart that I'm showing here inside my terminal. 11 buys, 10 holds, 15 sells, and yet you have a great bull thesis in your note, which I read cover to cover. What is your bull thesis to get us to $5.15 a share?
Well, one, I love being contrarian. So if we look at 2/3 of the group being negative or neutral, I think the winning is going to be on the bullish side. But, to get into the points, when we look at coming into this year, we see many positives, and we see that the main negatives, which were largely financial based in their ability to service the debt, largely behind the company. So if we look at the introduction of the Model Y, the semi-truck, potentially Roadster, and then more importantly, and probably most importantly, the Gigafactory over in China, all of that screams positive and also suggests better profitability, which has always been the big bear thesis on this name. So it's for those reasons that we took things up today.
David, we were wrapping up 2019 with some positive news. On the final day, the Netherlands said that they had more deliveries of those Model 3s. Does it look like Tesla is on track to really achieve those annual sales targets that they were hoping for 2019?
I think they probably are, and we'll find out in the next day or so. Look, they're getting good demand in Europe, which is kind of the more surprising market. Because electric vehicles, kind of, from the native automakers there, just hadn't taken off quite as well. But Tesla's doing pretty well there, and I think you're going to, in 2020, see more action from China. So, look, I think they'll probably hit their target for the year, and then they do have pretty good momentum. The bigger question, I think, for investors is, can they consistently make money with these cars, particularly as they start to sell cheaper versions of their models? That'll be the big question for a lot of investors, and whether the bulls or the bears win out on this one.
And Jed, I want to go down and sort of break out your thesis piece by piece, starting with the top line, just those annual deliveries. Are you confident that they have met those in 2019?
Yeah, I am. I think 2019 numbers, so we're at 368. They've given guidance for 360. I think those numbers are doable. I was going to jump into the profitability because I think there is a really important point to hammer home that kind of leads us to this bullish stance around profitability too.
So Jed, come and take a look at a chart here that I'm showing inside my terminal, because a lot of the bull thesis and the consensus I've been hearing around Tesla has been, frankly, betting on China. China demand has to be there. The problem is you're looking at sort of a decline in what has been the EV market over in China. Is there enough demand for Tesla to combat what looks like strong headwinds in the overall Chinese auto market?
So, first off, I think the short answer is yes, but we'd have to take a step back and ask ourselves, why are we going over to EVs? Our stance here is very bullish, and the reason, when you look at an ICE-based vehicle, you have less than 20% efficiency in terms of energy in versus desired output out. When we go to electric, that bumps up to 75%. It was the same thing that we saw in the lighting market when we went from incandescent light bulbs to LEDs. You saw a material shift in efficiency. I think you're going to see the same thing here. So when we look at the 75 or 80 million vehicles sold, EVs are still only 2% penetration in terms of that number. There's a lot of room for growth there. Further, when we look at profitability, as David was saying, I think the point isn't just China. The point is 3 and Y. They share 75% of the same platform. We've never seen that before. The S and X only share 25% of the same platform. So if you see the shift when you go from these low volume, high price vehicles that had little overlap to high volume, lower price vehicles that have a lot of overlap, that is suggestive of greater profitability increase for the company. That, I think, is a real important point.
David, some of the concerns I've heard is the 3SXY Cybertruck, they're all going to be cannibalizing sales, not producing new potential buyers. David, what are you hearing about that?
Look, that's a real possibility. Although to Jed's point, I think there is a lot of real growth here. I mean, his point that EVs are 2% of the market does give it a lot of room to grow. So there are just a lot of people who want an EV, and as they come up with more body styles, I think they'll get the growth there. I still do wonder about profitability, because the big question about Tesla has always been execution. Can they manufacture efficiently? Can they get battery costs down? Can they do all of this stuff on time? And that's been the real problem for Elon Musk and his company. Look, if this were a conventional automaker and they were sharing a lot of parts and platforms and making 3 different vehicles using 75% shared parts, I'd say, yeah, they're going to print money. But this is Tesla. They've never proven they can print money. So I think a lot of people will take a real wait-and-see attitude on that.
Well, both of you are talking about profitability, so let's go there right now. And the story of the year, if you look at this chart, was last quarter. That surprise profitability that came in much higher than analysts were expecting. So, Jed, the one concern is cutting their way through the margins, through that income statement, down to get a boost on the bottom line. Can they continue to cut their way to profitability, or do they need a new strategy?
So I think they can, and I think that's what we're seeing, and frankly, that's what we're betting on. But just to David's point, I think the most important data point didn't come from Tesla for Tesla. It came from their rival Porsche. You've got Porsche, with a preeminent brand, with the Taycan at 2 times the price of the Model S, with half the range, with the same battery pack. I mean, there is still it's not, when we look at EVs, it's not as simple as just tossing some battery cells and tossing a motor and inverter into the vehicle. There is some differentiation in terms of, and what Tesla has shown the ability to do is to monetize that range. You can either do that with price or you can do that with longer range. And both are valuable to the consumer. In fact, I would argue that that is the most valuable thing to the consumer. And it would be akin to coming out with a vehicle that gets 2x the miles per gallon as their competitor. And that was from one of the largest manufacturer in the world.